Quick question. What do you get when inventory increases, more properties have a price reduction, and interest rates stay higher longer than we ever expected? I'll share all of those details on the June 2025 housing market update. School is out, graduations have all been celebrated, and the Northern Virginia real estate market has some very interesting surprises as we are in the middle of June 2025. You know the saying where it says, let's talk about the elephant in the room? Well, right now we have three elephants in the Northern Virginia real estate room. The first one is inventory. It's rising. According to the NVAR region market statistics, we experienced 48.4% more inventory year over year in the month of May, resulting in 1.96 months of inventory. Keep in mind, this is for all property types. So these are condos, townhouses, and single family homes. But I thought we should just break it down by each of those different property types to see what the months of inventory are like for all of those. Single family homes lead the months of supply at 2.17 months. Townhouses had 1.43 months of supply, and condos had 2.08 months of supply. As you can see from this chart, over the last 3 months, inventory has increased in each property type except condos, which went down slightly in May. The second elephant in the room is median sold price and price reductions. Single family homes was down 7% month over month, but is also down 4.8% year over year. The median sold price for detached or single family homes in the month of May was $1 million. But this wasn't the case for townhouses. Townhouses actually increased 2.5% month over month, and they have seen an increase of 4% year over year. The median sold price for townhouses in the month of May was $690,000. Condos decreased 4.3% month over month, but saw an increase year over year of 1.3%. The median sold price for condos in the month of May was $405,000. Let's talk about price reductions. I've been referencing this weekly chart provided by Bright MLS discussing price reductions. They also talk about new active properties, new pending properties, and even showing activity. And this is all going to be very important as we go through this entire cycle through the summer. We'll focus on the percentage of active properties that had a price reduction that ended the week of June 8th, 2025. Alexandria City saw 12.8% of properties with a price drop. Arlington County saw 7.9%. Fairfax County was 11.5%. Loudoun County was 12.5%. Prince William County was 12.7%. As you can see, there is a percentage of sellers that are adjusting their prices because their home's staying on the market a little bit longer, and they're seeing that the buyer behavior is dictating that if the price is not compelling, then the home is not selling. Now, for the third elephant in the room that no one is talking about. Showings and new pending contracts helps us understand and discern if there's any positive or negative changes in the market on a weekly basis. Let's break down the showings and the pending properties that ended on the week of June 8th, 2025. Alexandria City had 53 new pending contracts, which is 1.9% more than last year and 9.8% increase in showings year over year. Arlington County saw 76 new pending contracts, which is 31% higher than last year and 14.1% increase in showings year over year. Fairfax County saw 411 contracts, which is 5.9% higher than last year, and showings were down 1.7% year over year. Loudoun County saw 158 contracts, resulting in 9.7% higher than last year, and showings down 0.5% year over year. Prince William County saw 169 contracts, resulting in 9.7% higher than last year, and showings up 2.7% year over year. So what does all this data mean as we move into the summer buying and selling season? It just tells me that there is still activity out in the marketplace. There are buyers looking at homes, they're scheduling the showings, they're just not always pulling the trigger right at the minute they see the house. They're taking their time. So activity's up, people are getting their houses shown, but the buyer would just make maybe they go and see another house, one or two other homes in the area. I gotta tell you, I've been doing a lot of open houses in Fairfax Station, Burke, West Springfield, Alexandria, and I'll tell you, I'm starting to see some of the same people, and this is over, folks, this is over like 6 to 8 weeks, looking at the home. This just tells me that yes, there's buyers that are engaged, they want to see the properties, they're thinking about making the move, but there aren't any time restraints on them to make that decision quickly. Also, there's other people that are coming in every week and looking at PCSing, moving to the area, relocation for jobs, and they are making those decisions. So what we're experiencing in this marketplace right now is if you really need to purchase, you're going to make that decision quicker. If you have some time on your side, you're going to keep looking till you find the home that fits exactly what you're looking for. And that may be price, location, condition. So keep that in mind, sellers, as you are navigating this June, July, August, summer buying and selling cycle. I like to define this type of market as not a buyer's market, not a seller's market, because those connotations seem like one person is getting more out of a home or a buyer is going to be able to negotiate on everything. And that's not the case on every single house. I think what we are in now is a balanced market. You see, usually the historical definition of a buyer's market or a seller's market is inventory levels. Well, right now, I just told you, we're not looking at very high inventory levels. It's just higher than we've had. We're just a little bit over 2 months of supply. That's not really called a typical buyer's market. However, because of interest rates, because of the uncertainty around their jobs maybe, or the economy, or what their checkbook and their pocketbook looks like and their 401ks look like based on interest and funds and stocks, then I just think that right now what we're seeing is balance. That means that buyers have a little time, they can look at a little more inventory. However, we're still seeing properties moving and selling at pretty good sold prices at any type of property type, from condo, townhouses, or single family houses. And as we go through the summer months, I just don't see anything really changing. So we are going to be in this balanced market, which I don't think is actually a bad issue. So as we go to the summer months, I really think that we're just in this balanced market, and we just need to set expectations as a seller, thinking about it could take a little bit longer selling cycle. And for buyers, they're really thinking about their criteria and making a decision based on affordability. Is this fit all the long-term needs that they want for their house in the future? Because remember, we're buying properties for 5, 10 years. And if you're doing that, you are thinking differently about your home, especially if you're looking at interest rates at 6.5% to 7%. I will share with you all the details of the next housing report in just a few weeks, and I can't wait to share that with you. Until next time.